Okay, so the question, this is an old question out of a test of 2018, specifically for partnerships. Now, I've made some commentary just to make it go a little faster in the explanation. So the first thing you have to do is you have to read what is required of you. So they want you to do the appropriation account. Now, remember, the appropriation account for a partnership is where we are distributing the profits between the partners and showing the additional partner-related expenses and income specifically. Now, for the appropriation account, you can go study the account. The only differences would be your current accounts and your interest accounts would sometimes be on the opposite side, depending on whether it's a positive or a negative account. Okay. But the rest of the information would be the same. So what you have to do is they ask you to do the appropriation account and they ask you to round to the nearest rand and show all your workings. Okay, so remember, show your workings. If you make a mistake, you can still get some effort marks for it. Okay, so let's see what information have they given to us. They told us the balances in the general ledger of Meyer and Lebogo for the financial year end 30 June 2018. Okay, so this is the balances at the end of the year. But now, very important, as you can see, the capital accounts as well as the current accounts is a balance at the beginning of the year, the 1st of July. You need to make sure when you go through a table like this, if there are any balances which have not been adjusted as yet. So the fact that they've given us the opening balances means that if we have to calculate any interest on it and it's in the beginning of the year, we don't have to adjust it. Otherwise, you would have to take the closing balance and then adjust it for any movements. So they give you the capital, the current, they give you the drawings amounts, and then there's a loss for the year. So in this scenario, we've actually made a loss. We did not make a profit. So that is your starting point. If I make a loss, which side of the appropriation account would we document that? There? Yes, so if we made a loss for the year, when we do the appropriation account, what side will I reflect that loss now? Remember, your appropriation account is a year-end procedure, so it's a closing account. So we transfer the profit and loss into that account and then we distribute it between the partners. So if I made a loss, is it going to be on the debit or the credit side of the account? It's going to be on the debit side. So this will be on the debit side of your appropriation account. Okay, a profit would have been on the credit side. Now let's see what other information they give us. So they tell appropriations according to the partnership agreement. So that is partner-specific transactions which we still need to account for. So remember that loss for the year is generally before we've taken into account any partner-specific transactions. So they tell you interest on capital must be appropriated at 8% per annum. Capital balances remain constant. So that means we use the capital balance as is, it hasn't changed. Now, if I've got interest on capital, is it an expense or income for my partnership? Okay, so it's an expense for the partnership. And it is income for your partners. Okay, so in the appropriation account, I'm going to show it as an expense. But if I had to do the equity disclosure, I would show it as income for that individual partner. Okay, let me repeat that. In the partnership, it's an expense. In the individual partner's hand, it is an increase in their capital. Okay, interest on drawings must be appropriated at 10% per annum. And we do it as if the drawings were made 5 months prior to the year end for Mr. Meyer and 7 months prior for Mr. Lebogo. So what that means, is they say that Mr. Mayor withdrew this money 5 months before year end, whereas Lebogo took it out 7 months before. Now, why do they tell you the number of months? That means we have to apportion the interest we are paying. Now, drawings, because we actually do not want a partner to withdraw their money, this is income in your partnership. So we are penalizing each partner for taking money out of the business and then putting that into the partnership. Okay? Then the next one is interest on current accounts. Now for the current account ones, you can see here it's on opening balances, one. Second thing you need to look at, is it a positive or a negative current account? So normally with the current accounts, they will give you one where the guy has a positive balance and one where they've got a negative balance to work out the interest. Now the interest on your current accounts, you will do generally the net amount. So you have to go look at which one is bigger, which one is smaller. Okay, and that is 12% per annum. Then they tell you both partners must receive an annual salary. So Mr. Mayor gets 120,000 and Lebogo gets 150,000. So we also have to account for that. So a salary would also be an expense in the partnership. And then they tell you Mayor also receives an annual bonus of 30,000, so that is also an expense. And then the remaining profit and loss. So now after we've done all the partners' distributions or incomes, expenses and incomes, then the remaining profit is split between the partners 50-50. If they do not give you a ratio, then you use the capital amounts to do the apportionment. Okay, so based on the capital they have on hand, you will use that as your ratio. Okay, so I'm just going to stop sharing this and then I'm going to share the Excel file with you guys. Okay, guys online, can you see the Excel file on your screen? So I just want to make sure before we continue. Just give me a thumbs up if you can see it. Okay, great. Okay, so the first entry we record is the loss for the year. So that is step one. So we record the loss for the year and we know a loss is on the debit side. So you go record profit and loss and you show the 20,000. Our folio numbers for these accounts are your general journal because it is closing entries after we've actually done our books. Okay, so that is the first entry. Then if we go to the additional information, we now have to account for the interest on the capital, which is 8% of the capital balances. Now we know the capital balances for Maya was 250 and Lebogo is also 250. Now we said that is an expense for the partnership. So if it's an expense, what side of the appropriation account will we enter that information? On the debit or the credit side? On the debit side. So expenses always on the debit side. So what you do, oh sorry, don't want to do the salaries just yet. Okay, so what we do is the interest on capital. We said it's 8%. Just going to make it a little bit bigger for you guys there in the back. Okay. So you take the 250,000, which they've given you as the capital balance. We know it's 8%, and they told you it remained unchanged or constant during the year. So that means that 8% is applicable for the entire year. Because both partners had the same capital amount, you do the calculation twice to get to a value of 40,000. Okay. If one of the partners had a different capital amount, you would have then used their different capital amount to work out the interest. Then the next one is the interest on drawings. Now we said drawings is where we take money out of the partnerships. So by penalizing them, we are getting interest. Now, Mr. Mayer had 30,000 and he withdrew it 5 months before year end, whereas Lebogo had 15,000 and that was 7 months before. So because we know it is income, it would be on the credit side. And then you show the total amount, but you have to show me the calculation. So you do the 30,000, multiply with the 10%, times the 5/12 for Maya, and then you add the 15,000 multiplied with the 10%, multiplied with 7/12 to get to an interest amount of 2,125. Okay. Now you can see here, if you misread it, let's say you said both of them were 5 months. You get half a mark for the capital amount, half a mark for the percentage, and half a mark for applying the correct period. So let's say you had the incorrect period. You can still get 1 mark out of 1.5 marks by showing me the calculation, even though you made a mistake. Okay, so this is why you need to show me the calculations in the exam. Okay. You can show it either in here in the account, or you can just show it at the bottom. You show me how you worked it out. So if you don't want to write down interest on drawings, write interest on drawings in your account, put a number 1 or a number 2, and then at the bottom a number 1, and then you do the count. But you need to clearly show me where you've done the calculation so that I can go apply the method marks. Okay, so that is the second one. Then there was interest on the current account. So now we have to go look at the current accounts. The one was 45,000, which was a positive, a credit balance. And there was a 40,000, which was a negative balance. Okay, so the 45,000 would be an expense for our partnership because of the fact that the partner left the money in the partnership, whereas the 40,000, which is a negative balance, would be income. So in this scenario, our expense would actually be greater than the income. So that means we have to show the net amount on, okay, so they actually did it separately. So they did interest on current account, the 45,000 for Mayer was 5,400, and then they did the one for Lebogo on the credit side. You can also net it off because it's interest on current and just show me the net amount. That would also be correct. Okay, so in this scenario, let me just make it slightly smaller so we can see all the information. They've done it on both sides. If it is easier for you in an exam to do them separate, to remember what is income, what is expense, you are welcome to do it that way. Okay. Okay, then after that, we've got our annual salary. So we know Maya is getting 120,000, Lebogo is getting 150. Now we know that is an expense. So you account for the salaries separately, but you need to, for a partnership, indicate which partner it goes to. Okay, so that is very important specifically for your partnerships to indicate which partner it got paid out to. Okay, then we say that Al Mayer received the annual bonus of 30,000. Now, in a partnership, we don't distinguish between the bonuses for the individual partners. We just say bonuses to partners. So if both of them receive a bonus, you would just consolidate it, but generally only one of the partners normally get a bonus. And that is also expense to your partnership. Okay, then we've got, what do we still need to account for in here? Is there anything else you think we need to account for? Is there any other thing we need to account for in this account? Okay, so the last thing is the profit and loss. So the net amount that's left over, we need to calculate it. Now, how we generally do it is we add, you can have a look at the account, but you can see that the debit side is a lot bigger. So we add all of the debit side to get 365,400. And then what you do is you deduct the credit side to get what's left over. Or alternatively, you could go work out the remaining loss by just doing a normal mathematical calculation and showing me how you got it by adding it all together. Okay, now based on the fact that I know these are expenses, I showed them as a negative, and then the income I showed as a positive. And then if you add all of that together, you get a negative amount of 358,475. So we actually made a loss based on all the additional expenses. Now that loss is then distributed equally to the two partners to their current account. Remember, the current account shows the movement in the capital in a partnership. So because of the fact that we made a loss, we now have to credit the appropriation account with the remaining balance. So that 358,475, I multiplied with 50%. And then if you add it up, okay, it's actually 750. So the one would have been an 8 and the other one would have been a 7. But if you have a rounding error, we generally give you the mark anyway. So then the left-hand side and the right-hand side would be the same, which means that temporary account would fall away. And our current account, because we are crediting this account, we would debit the current account, which means we are reducing our owner's equity portion or our equity portion in the partnership. Okay, and this is how you do an appropriation account. Okay, so this current account would be on the debit side if we made a profit. And if we had a profit initially, it would be on the credit side, on the opposite side. But the rest of it would generally be more or less the same. Okay, the account. So what you can do for the exam is go write down this account and go study the format. So that if they ask you something like this, you do not lose the marks for the account names and the folio numbers, and you just have to then work out the amounts. Okay, do you guys have any questions on this? Guys online, are you okay? Do you have questions? In the class, do you have any questions on this? Yes. Okay, so we include the current account because that is where we distribute your changes in equity. So the profit or the loss you make is accounted for in the current account of the partner. Okay, so that shows your movement in the equity for the partner specifically. That's why we take it to the current account. Okay, it's just a normal rule that you need to know. Okay, guys online, do you have any questions?